topic 3 of this topic, this book, that is Management Accounting. Feel welcomed, those who are new. Now, topic 3 of Management Accounting, we are going to deal with cost estimation. As you can see there, cost estimation is our topic, and this is where we shall start our computation part, which is very important for you to understand, because this topic is also important for the purpose of examination. It's very important. You can find a question concerning this topic in one of the exams, either full marks or small marks. You can find a question. Now, cost estimation is topic 3, and we shall start with the definition of what is cost estimation. It's important we start by understanding what does the topic mean. Now, when we talk about cost estimation, we are trying to see the behavior of the cost. Remember, in chapter 2, we had talked about behavior of cost, and we said the behavior of cost is the degree in which the cost changes as the level of activities does change. Now, in this case, that is what we are going to do here. We are going to deal with cost behavior. And when we talk about cost estimation, we are trying to predict cost. And how do we predict cost? Remember, cost changes. So the behavior of the cost is that it changes from time to time. And therefore, we are trying to see or to predict cost by comparing the cost itself, or the past cost, with the past level of activities. Now, this definition will be the best definition. This one is the second one, the second definition, which says cost estimation is the process of predicting the relationship between cost and the level of activities. So that process of predicting future cost, is what is called cost estimation. This one will be the best definition. Now, we have other definitions. For example, the first definition says cost estimation is the process of determining in advance the amount of cost to be incurred given activity is undertaken. That is also correct. So the process of determining in advance, that is the future cost. So we are trying to predict future cost. But given there must be a cost and there must be an activity which has already occurred. So mostly we use the previous information to predict the future. Then you have the third definition, which is also good, is the process of using past data. This one now is good also, because we are talking about past data. So it's the process of using past data, judgment, or engineering information to predict how cost will change as the activity level changes. Also, this one is a very good definition. This one is so good. Now, the total cost. Now, when we talk about estimation of cost, we are talking about determination of total cost. So when you are saying we want to establish or to predict or to determine cost, we are saying we are trying to determine total cost. Now, how do we get the total cost? Now, total cost is the combination of fixed cost plus variable cost. So total cost, you write it down, is equals to fixed cost plus variable cost. Now, this one can be further be converted, or we can substitute this equation with this equation below. So you can say this equation, let's just say it here. This equation will be substituted with the equation below. Now this equation below hapo chini yake, y is equals to a plus bx. Y is equals to A plus bx, where Y is your total cost, A is the fixed cost, B is the variable cost per unit. So underline that one. B will be your variable cost per unit, while X is the level of activity. While X is the level of activity, while X is the level of activities. Now let us see the key assumptions that we made when doing cost estimation. So there are some assumptions that we need to do what? Assumptions that we need to follow. Number one, the relationship must be linear. So the relationship between the variables, which makes that equation, y is equal to a plus bx, must be in linear form. So that is number one. The relationship between variables must be linear. Number two, past cost behavior must be reasonable. So you cannot estimate something in the future using something which is not reasonable. So the information about costs that you have, that you want to use to predict future costs, those type of costs or the cost data that you have must be reasonable so that you can use it to predict the future cost. Number three, data quality matters. That's another one. So for example, when you say data quality matters, i.e., we can say something like that there should be no outliers. Outliers naandiko vipi? Outliers. In short, your data should not be so much scattered. It should be linear. So your data should not be so much scattered. That's what we mean. So the data quality must read to what we call linearity. There must be no outliers. Let us see some of the purpose of cost estimation, which is the same as purpose of management accounting. So this one is the same. Purpose stroke objective. So purpose stroke objective of cost estimation is the same as the one for purpose for management accounting. Number one, it assists in predicting future cost. It assists in predicting future cost. So it assists in predicting future. Then that one we have said it from our equation. So then the normal equation y is equals to a plus bx will help us to do what? It will help us to estimate this type of cost. Number two, it assists in budgeting processes. Number three, it assists in determining the expected net benefit. Now, expected net benefit is another name of profits. It's another name of profits. So expected net benefit is another name of profit. So how do we get profit? You get profit by taking the revenue, you minus cost. Now, but that cost, you need to have the cost. So you need to predict the cost first before you find the net benefit. So it assists us to get the total cost that will help us to get the net benefit once we deduct it from the revenue. Number three, it assists in future planning. That is fine. We talked it in topic 1. It assists in cost control, also in topic 1. And then it facilitates decision-making processes. Also, that one is fine from topic 1. So those are some of the objectives of cost estimation that you can find in any examination. Steps in determining cost estimation. Number 1, you determine the dependent variable. Now, this one is our dependent variable. Let me go back to our equation. Let me copy this equation back here. Let me just copy this equation again. Let me copy this equation, then I paste it here. Let me paste it here. think that one there. Now that one is fine. Now number one, the first step, we determine our dependent variable. A dependent variable is a variable which depends on another variable, and that one is our y. So from our equation, y is our dependent variable. For example, we can say that the total cost of manufacturing television, for example, is our y, and that one becomes dependent variable. Then number two, we identify the cost driver, which will be our independent variable x. Now, what is an independent variable? An independent variable is a variable which predicts another variable. Now, for example, when we say that our dependent variable is the cost of television, now from that cost of television, which is our dependent variable, what will be our independent variable? Now, our independent variable will be the number of television. So that is how you identify it. So, for example, what factor determines the total cost of manufacturing television? Now, one of the factors you can say is the number of television or the units. So that is it, number two. Number three, you gather information about x and y. So you find the total cost, the past cost about television. That will be your y, and then you determine for each cost how many television were manufactured. So for each, then you determine the number of television for each cost that you have identified. Number three, you analyze. Number three, you analyze the data above and observe the trend. How do you analyze it? You analyze it using, you can use any method that you have or you know, which we shall talk about them later. Number five, develop an estimation equation. That is this one. Y is equals to x plus bx. That is the estimation equation, or we call it the predictor equation. So this one, you develop this equation. Y is equals to a plus bx. That is what we call the predictor equation or the estimation equation. Good. Now let us see now the methods for part 4. Step number 4, analyze the above method and observe the trend using appropriate methods. You can say using appropriate method. And those appropriate method, it is iko hapo chini. So using appropriate naandiko vipi? Method. Now let us see the method. Now we have the methods here. So we have non-mathematical method. We have non-mathematical method. Nimeweka mara mbili. So we have non-mathematical method and you have the mathematical method. Non-mathematical method, we have three: industrial engineering method, account analysis method, then we have the high-low method. Then mathematical method, we have the OLS, least square method, the OLS, ordinary least square method, or the simple regression. So you can say also called, because they can use this one, ordinary least square method. Method inaandiko hivyo. That is it. So those are the methods that we can find when we talk about cost estimation method. Now let us start with the first one. Number one, engineering method. Now for engineering method, this is a method that uses skills and method that you have acquired in class or from your experience to determine the cost. So it compares the input and output of the physical what? Physical inputs. It compares the input and the output, of the physical units produced. Now let me just a moment. Just a moment. Tuko tunasema engineering method. This one does not have any computation, so it is just the way it is. So engineering method, sometimes it is also called they use the word industrial also. That one is fine. I think we have mentioned it above there. So industrial engineering method, or they call it industrial method or engineering method. Now, in this method, the industrial engineers and the financial engineers does what? Analyze the information using their knowledge, skills, and experience to determine the relationship between the input and output. That one is fine. Now, it is applied in the following circumstances. It is applied in the following circumstances. Number one, when the product is, for example, when the product is new. So one of the application, it is applied when the product is new. It is mostly used when the product is new. Number two, when the item is of construction in nature. When the item is of construction in nature. And number three, when the relationship can be expressed in physical quantities or in the form of material. So when the items can be expressed in the form of material. It is also applicable, another one, when the part of the data is not available. We can also add that one. It's also applicable, we can add that one. We say it is applicable when the part of data, when the part of the data is not available. So you also need to know that one. So these are some of the circumstances that this method is suitable. So it is used when when part of the data is not applicable. Hey, is this not applicable? That one, I think that one is fine. And then maybe we can say, I think that one we have said where it is not possible to define the relationship between output. I think that one you have said it. So when the relationship can be expressed in physical quantity, that one is fine. That is some of the assumptions that you can find or circumstances. Now this method is easier to understand. So this one is advantage. So advantage of this method, number one, it is easier to understand. Number two, it is economical in nature. Advantage number three, it is time effective. Let us just say advantages. So this one is advantages. Advantages of engineering method. Advantage of engineering method. So number one, this method is easier to understand. Then number two, this method is economical to use. And then this method is time effective. Then we can say that this method is time effective, does not require a lot of time because you just analyze it by use of your mind and knowledge. There is no so much work. Now, disadvantages. Let us see disadvantages of this method. Disadvantages. Disadvantages of this method. Now, this one we can say Number 1. Just a moment. What have I done? Niandika open. Sorry. That one is fine. Now, so however, this method, number 1, this method is subjective. Now, it is subjective. It is from the opinion of a person, and that opinion might be wrong. For example, a person might say that this form of item is variable cost, but in nature, it is not variable, it is fixed. Now, that person will use that item as variable, even if it is fixed, because from his judgment, he or she argues that the item is variable cost. Now, in that case, it becomes subjective in nature, and there is a lot of biasness in this kind of method. So that is one of the disadvantages of this method. We only have one limitation or one disadvantage. That marks the end of engineering method. Now I think we can progress to the next method. Next method is account analysis method. Now, account analysis method is a method which separates variable cost and fixed cost into two different components. That is what you need to know. When you talk about account analysis, you are also called the inspection method, actually. So you can say, or the accounting. So they can use the accounting inspection. Accounting inspection method. Now, this one is very, very important. And this one, you can find it in an exam. It's a very common method, both in certified accounting or ACCA or any form of accounting. This one is a very common kind of equation. Now let us read it. Let us read the definition. Now, account analysis method involves the analysis of ledger account where the costs are recorded and classified into fixed and variable cost. That one is very, very correct. Now, what you need to remember that when we are talking about this method, before we get the predictor equation or before we come up with a cost function, so cost function is also called the cost estimation equation or the predictor equation. So before we come up with that equation, we need first to analyze the cost, then we classify them to either fixed or variable cost. Let us see some of the steps. Number 1, we list all the costs. For example, electricity cost, maintenance cost, supervision cost, direct material cost, direct labor cost, administrative cost, all those kind of costs, we list them together. Once we list them together, then we decide as the accountants or as the accountant, we decide which costs are fixed, which items are variable, which items consist of both fixed and variable based on the behavior of that cost in the past. Now, once we decide those costs, then we do what we split. This one I think is, for this one is not a step. Now, for mixed costs, we split them into fixed or variable. This one is not a step. Inafaa ikuwe hapo. Bas. So if the cost is mixed, then what do? We split them into fixed and variable. Then step number 3, which is our last step, we build our cost function. And remember I said another name of cost function is the predictor equation function or cost predictor equation. So they can use this name, equation, ama wanaweza ita cost estimation equation. So cost estimation equation. So you need to know all this. And that equation we have it here. Y, that is what we call the cost predictor. Y is equals to what? Y is equals to A plus BX. Cost estimation. This is supposed to be estimation equation where Y is equals to A plus BX. And remember we said Y is our total cost. Remember we said Y is our total cost. And then we say B is our variable cost per unit. Remember the word per unit. Then X is the number of units produced and sold. Now, under accounting analysis method, how do we get the value of B? Under accounting analysis method. So for under accounting analysis method, B is equal to total variable cost divided by the number of units. Is that one okay? Up to that point, those who are available. So before we do a question, before we proceed, okay, that's fine. And I think you should talk. You don't want to talk. I'm going to go barabarani. Okay, that's fine. Now, let us go to this question. I did this question, but we can do it together. Now, this question is for August 2025, question number 2A. So if you have your past paper I had shared in the group, you can open. So you can open your past paper. I shared it in your group. So open that question. I'm looking for that item. where can I see it? I'm looking for this tab, which this tab that I'm looking for that has this. Okay, let me share just the entire screen for now. So can you see my presentation? This past paper is available in your group. I had already shared it. So can you see the past paper?
Yes.
Good. Now, last sitting, the question was there, question number 1C, December 2025, the paper that they did last sitting. It was 1C. This one was high-low method, which we are going to do next. So this one we are going to ignore for now. You can see that one, Gateway Hospital, Question number 1C. That was high-low method. We are going to skip it for now. Now, I want us to go to the next sitting. That was for August. Now, August 2025, question number 2A. Are you in a place where you can read the question so that at least you know how the questions are?
Yes.
So if you can, please read.
Information for the month of July 2025 for Supershine Polish Factory when 10,000 units were produced as follows. Cost elements, total cost and cost behavior. Direct material for 20,000 shillings, direct labor 150,000, depreciation 80,000, fixed, it's a fixed period cost. Then telephone charges 6,000, 100% fixed. Production overheads 40,000. Supervisor salary 200,000. Machine repair 60,000. Packaging cost 4,000. Cleaning expenses 60,000. Additional information. Number 1, all direct costs vary directly with the change in the level of output units. Number 2, the semi-variable costs are based on output level of 10,000 units required. Using account analysis method, derive a cost estimation equation in the form y is equals to a plus bx. Roman 2, estimate the total cost for the month of August 2025 if 9,900 units were produced in the factory.
Good. Now, this kind of a question is derived, or it borrows the concept of the account analysis method, or the inspection accounting method. Now, the first item, direct material. Now, direct material is always a variable cost. That one you need to know. All items which are direct, for direct material, direct labor, direct expense, direct salaries, anything that is direct, by default is always variable cost. Now, depreciation is always fixed because the rate is always constant or the same. Now, telephone charges, because you find that you pay the same amount of charges for telephone. For example, like Wi-Fi, it is same unless you upgrade, but it is somehow the same. If you choose a package, then that package will be constant throughout the period. That one is fixed. Then production overhead. Production overhead, these are indirect costs which contain both variable and fixed. Salary supervisors is also an indirect cost. So indirect cost can be either fixed or variable. Also that one contain. Packaging cost. Packaging cost, because it relates to packaging of material, then that one will be variable cost. So remember, all direct cost we said, or anything direct is always variable. Cleaning expense, that is variable, meaning the rest is fixed. 2/3 will be fixed. Now, for you to do this question, let me show you the format that you need to use. Let me just share the format, then we do the question together. So let me share the format. Let me share the format, then we do it together. Yeah, this is the format. So can you see the format? We start with this one, this part, the one which is in blue. That one. Can you see that format? You start with the cost element, or the element of cost, that is, for example, direct material, direct labor, the one that we have on the other side. Then we go to the total cost. The total cost, and even we can remove the 10,000 units. We go with the cost that we have been provided with. Let us just say total cost to be specific. Once you have the total cost, the next part you need is the cost behavior. once you have the cost behavior, now we can have our fixed, variable, and we can have our fixed cost and variable cost. Is that one correct? Is that one fine? Then the last item, we can remove this one. This last item is not relevant here. This one, we need to delete it. Let us delete this part. That good. Now, that is the format that you need to have in your paper. You start with the element of cost, then the total cost, then the fixed cost, then the variable cost. Is that one okay? Then we do it together. That one,
Yes.
this is fine.
Yeah.
So let us now do it together. So I'm going to use Excel for computation purposes. Just a moment. This question is for August 2020. 2025 question. August 2025. Question number 2B, is that correct?
2A.
2A. That one is fine. Now, so let me open I want to open the Excel sheet. I had already done it, so that's not a problem. So let me share first. My Excel. So which Excel do I need to use? This one. Book number 1. Now, can you see my Excel sheet? Can you see Excel?
Yes.
Good. Now, in your Excel, we need to come up with those items that we have mentioned, the elements. Is that correct?
Yes.
Now, before, let us remove these any items. Just a moment. This one. Just a moment. Can you see now?
Yes.
Good. This item here inanisumbua bwana. Ndaitoa aje? Okay, micheke ndafanya. Hawezi nishinda hii akili bwana. Hii ndio inakatika. Sawa. Nimeona, let me just make this one to be remove these headings and stuff. Good. Now I think that one is fine. Now let me copy paste that question here. I had it here. I had already done it here, but I want to copy paste this so that I can show you how to go about it. Yeah. Now this one is fine. Let me show the headings. It will be quite big. Let me make it a bit big. Yeah. Now that one is fine. Now can you see?
Yes.
So I said number 1, when you start with this question, we name our elements, our total cost, our cost behavior, then our fixed cost, then variable. Is that one correct?
Yes.
So let me do away with these items. these items because in that manner. So let's start with the first one. Do you have the question? Mimi nitakuwa nikikuuliza unanipea figure. Okay, even we have it. So hata kuna haja. So let us start with the first one. The first one is direct material. So direct material, what did they say about direct material, the cost? They just say it is 420,000. What does it mean? We said anything direct is
variable.
Anything direct is the variable. So unakuja unaweka hapa kwa fixed you put 0, but for direct you put 420,000. Is that correct? Haya, hiyo tumemaliza hivyo. Next we go to the next item. The next item is direct labor. What did you say about direct labor? It is 100%
variable.
So you need to know that. So under fixed you put 0. This one will become for variable 150,000. Is that correct?
Yes.
Let's go to depreciation. We say depreciation is always fixed. Is that correct?
Yes.
So if it is fixed, then it means it will be 80,000 fixed. Then variable cost will be 0. Now next is telephone charges. We said it is 100% fixed. Is that correct?
Yes.
Meaning variable is 0. So unaona venye table natengeneza kwa exam. Next we have a production overhead. Now production overhead, look at this equation. Can you see that equation?
Yes.
Now y is equals to 80,000 plus 3.2x. Now from what we have said earlier in this class, 80,000 represent what? What 8,000 is equals to what? We said in this equation y is equals to a plus bx, where a is fixed cost and b is variable cost per unit and x is the number of units. Now 80,000 represent what?
The fixed cost.
Yes, now we put here the fixed cost, that manner. Now if the fixed cost is 80,000 from the 40,000, the remaining will be what?
32.
The remaining 32,000, is that correct?
Yeah.
So 32,000 will be what?
Variable.
Sababu umeelewa venye tumefanya?
Yeah.
Now another way you can find the variable cost. Can you see the variable cost per unit?
Yeah.
How much is our variable cost per unit? $3.2. Is that correct?
Yeah.
Then you multiply with the number of units. Number of units compared to total cost for these units is 10,000 per 10,000 units. Can you see?
Yeah.
So when you take 3.2 times 10,000, what are you getting?
32,000.
Now that's another way. Let's go to the next supervisor salary. What's our fixed cost?
200,000. 160,000. $40,000.
Oh, sorry, I left. Ndio nimerudi now. We were in supervisor salary. So what's our fixed cost under supervisor salary?
40,000.
Supervisor salary is 40,000. Fixed. Or variable is 40,000.
Yeah.
Yeah, so how do you get it? You take 4 times 10,000, which is our total units. Is that correct?
Yeah.
That one is fine. Let's go to machine and repair. What's our fixed variable?
6,000.
Variable?
54,000.
Correct. Let's go to packaging. For packaging, they said it is 100% variable, meaning fixed is 0. Is that correct?
Yeah.
Yeah. So it will be 4,000. What about cleaning expense? They said a third is variable. So a third of that is how much? 20,000. Is that correct?
Yeah.
Then fixed is 40,000. Now that's how you prepare that table. Is that correct?
Yeah.
Now once you prepare that table, we need to determine the value of A and the value of B. Savio. Now for A is the fixed cost, which tuko nayo already pare. A, it will be equal to the total of the fixed cost pare chini. So you add the total. So let's put them together. When you add from your end, mina to me exactly quad. So when you add from your end, what are you getting? Kenya shillings. The fixed cost, you add them together. Me, my partner 300,000. I hope you are getting the same.
Yes.
Yeah. Now, what was the formula for value of B? Jika uliandika chini. We said B is equal to what? Total variable cost divided by the number of? We said is equals to total variable cost divided by? There hapo nimekuwekea. Can you see it?
Yeah.
Total variable cost you divide by?
Number of units.
The number of units. That is correct. Now, what is our number of units? Total number of, sorry, not total number of units. What is our
1,000.
total variable cost? Total variable cost, you got to make up with 720. Yeah, that is the total variable cost. So you take the total variable cost, you divide it by, this one you center it, let us center this one first. Tunasema unachukua 720,000. You divide it with the 10,000
units.
10,000 units, because that's the number of units. Is that correct? So what do you get once you divide? So B will be equal to, Kenya shillings 72 what? So you need to ask yourself, what is 72 what? You are talking about factory porridge super shine. So let's just say per unit. So we say the B is always per
unit.
Per unit. Is that okay?
Yes.
Now we have the value of A and we have the value of B. Now the question was this: using the account analysis method, derive the cost equation. So this is the cost. The cost equation. The cost equation is equals to Y is equals to A plus BX. Now can you come up with the cost equation? So we can say therefore the cost equation will be Now we say y is equal to, what's our value of A?
300,000.
Plus value of the value of B,
72.
so 72x. That's our predictor equation. This is what they wanted. Is that easy?
Yeah.
I think that one is well said. Any question of that point?
No.
No question. Now, so that is it. Let's see part B of that question. So if you need this file, I will also share. But already compare notes. Now, part B of this question, they said, let's go to part B. Estimate the total cost if there were 9,900 units. So wanasema estimate total cost if there were 9,900 units. So what would be our total cost? You use the cost equation, sivyo? So utasema y is equals to 300,000 plus that 72. Then we want to predict x. So for which x? 9,900.
900.
So what would be the total cost? Ten 12 800. Is that correct?
Yes.
That one marks the end of that question. It was as good as that. Any question?
For part A, hapo kwa equation y siwezi andika kama 10,20,000 is equal to 300,000 plus 72 times 10,000.
Just repeat ati kwa equation wezi andika?
Hivyo venye tumeandika y is equal to 300,000 plus 72x. Na nikiandika kama hiyo 10,20,000 is equal to 300,000 plus 72.
10,20 umetoa wapi? 10?
Hii ya total cost ya hapo hivi juu kwa table.
Hiyo total cost achana nayo, hiyo kuna mahali unatumia. Unatumia tu hivi venye iko.
Sawa.
So that marks the end of that question unless you have a question concerning that.
No.
So umeelewa?
Yes.
So no, that one is all about. Let me go back to my normal PDF. I think we can do that one for today. Ama unaonaje?
Yako sawa.
So can you see my presentation?
Yes.
So the we have done is that one, and this is my results. 72 B is equal to 72 Kenya shilling 72 per unit is 300,000, and then part B, the cost for 900,000 units is 1012. So this one this one imenitoe hii. Ngoja just a moment to this one. That one. Is that one okay? Now I think we can reach up to that point. We shall start from the weakness of the accounting method. Then we introduce the high-low method, which I did the question for December 2025. That was done previously.
Okay.
So we shall do that one. But I will share this tomorrow. It's on a weekend. Are you going somewhere? Before
Job.
utakuwa job.
Uh,
So tomorrow mchana upatikani.
no, maybe in the afternoon.
Okay, we shall see about it. Now for now, we shall start from the high-low method in our next meeting. I think that one will be okay.
Yes.
So you have a great night until we meet next time.
Okay.